Hello everyone, welcome to our Heikin Ashi for Scalpers webinar. I cannot hear a thing though. Let me double check whether the settings have been set properly. Hmm. Okay, I think so. Okay, so guys, Heikin Ashi, I don't think we have recently presented something similar, so I decided to refresh a bit the Heikin Ashi indicator. How many of you, by the way, have ever tried or heard about it at least? Just out of curiosity. Until you reply, I will go through the disclaimer warning as usual, okay? So this material is provided as general marketing communication for information purposes only and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment leveraged product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. This warning: trading leveraged products such as forex and derivatives may not be suitable for investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives, and level of experience before trading, and if necessary, seek independent advice. You can find our full risk disclosure on our website along with any legal documentation that you might need. Okay, so feel free to visit www.hfm.com. So guys, I would really appreciate the feedback in regards to the audio, whether you can hear me loud and clear, see my screen as well. Just a confirmation. Okay, quick yes, no. I would like to remind you that this webinar is recorded. Okay, so if you cannot stay until the very end of the webinar, you will receive anyway an email in your inbox with the recording of today's session. Also, I will upload just now the PDF version of my webinar. So feel free to download the notes. Anyone, guys, can you confirm that you can see me and hear me? Just on the question box, just type a yes and a no. You're very quiet, so I'm worrying that you cannot hear me. Okay, thank you, Simon. Thank you, Kennedy. Thank you. Thank you, everyone. Thank you for confirming. So we are good to go. So we're gonna see a bit of a background of Heikin Ashi, what it is, how you can set it up on MT4 and MT5. I did a mistake over here. It's not only in the premium trader tools, but it's by default in the MT4 and MT5 as well, so don't worry about it. But more importantly today is to understand and interpret the Heikin Ashi candles and the importance of the wicks. We have plenty of examples. I've put on many charts. So I think that will help the most in regards to Heikin Ashi. Okay, let's start. Let's start firstly with what it is. Okay, a bit of a background as well. So it's another technique. Okay, it's another technique that is used for seeing the price action with more clarity and less noise. Okay, but before I explain the calculations behind Heikin Ashi. I would like just firstly um, to mention that it's called Heikin Ashi because obviously it's Japanese. It's a Japanese term. Okay, it's a Japanese term, and it means Heikin Ashi means average bar. Okay, so Heikin Ashi candles are is a fourth, let's say, type um, of um, of chart. Like we have line, right? We have bar chart, we have candlestick chart, and this is, and now we're gonna see Heikin Ashi chart. So pretty much it displays, okay, displays the average bar of the uh, uh, of the price action. Okay, it filters out the noise. What I mean by noise, it filters out any, over the day we might have some breaking news. We might have releases, data releases that they could cause some sharp fluctuations. So what the Heikin Ashi does is filtering out the noise of the day-to-day price fluctuation. Okay, smooths otherwise smooths the price movement. So it's a type of a price chart that uses averages to show the price movement of an asset. Okay, so it is another technical analysis tool. Okay, another technical analysis tool. Just a second. That it gives you, we're gonna see the pros and cons later on, but the purpose of using, of some people at least, using Heikin Ashi or prefer to use Heikin Ashi rather than candlestick patterns, candlesticks, sorry, is because they see past the choppiness and volatility that is in a normal, common chart. So you by using Heikin Ashi, you are able to see the overall trend with more clarity, and you can make a better informed decision about whether to enter or exit a trade. We're gonna see comparison with the regular candlesticks. Don't worry about it. So you will understand what we mean by saying that it smooths out volatility of the currency pair. Okay, you're gonna have a little example over here of how they look like. They look like candlesticks, but they are different. They are the open price, the low price, the close price that they give. It's slightly different than the regular candlesticks because the calculation is also different. Okay, because as I said, they are average bars. So let's move on. Okay. So actually, let me skip this, and firstly, let's see how they look like. They look like, as I said, like a proper, like a candlestick bars, but since the calculation is based on the average, okay. If we compare, let's say the last, so these are the same assets, okay, but in a candlestick formation and a Heikin Ashi formation, you can see that this upwards movement that we had in the candlestick chart, in the Heikin Ashi chart, it looks like this. So only bullish candles, only green candles. Sorry, really sorry for that. Exactly because the calculation of Heikin Ashi is a bit more complicated than those used for candles for the standard candlestick. Why is that? Because we have a different open price with different close calculation, high and low. So the open, let's say, let's assume, let's take the very last one, okay? Very last one. On the regular candlesticks, it looks like that. In the Heikin Ashi, though, it looks like a doji candle. Why is that? Because the open price for Heikin Ashi is the open of the previous bar. So here, the close of the previous plus the close of the previous bar divided by 2. So it's the average of the open and close of the previous bar. So you see, that's why it's called average bar. It's a very different calculation. So if I have it somewhere, yes, I have it here. So here it is. When we have a Heikin Ashi candle, open price is not the open price of the asset, okay? Is the open of the previous bar plus the close of the previous bar divided by 2. The close level is the open plus the close plus the high plus the low of the current bar divided by 4. Completely different approach. Open plus high plus low plus close of the current bar divided by 4. So we'll have the average price of the current bar. The open, as I said, is the middle point of the previous session. So the open plus the close divided by 2 is the midpoint of the previous session. The high level now is the highest value in the set, is the maximum value from the high, open, or close of the current period. So whoever of these 3 is higher, this is considered to be the high level. So if the open price is the highest one from the 3, then that will be the high of the current period. If the close is the highest value out of high, open, and close, then that will be presented as the high of the current period. The low now is the minimum value from the low, open, or close of the current period, okay? You don't need to know these calculations. It will be good to understand them. Of course, it will be good. Because you will be able to comprehend better the Heikin Ashi candlesticks. So let me take a step backwards, because before I go more in depth on the previous slide that I skipped, just to emphasize a bit that, as we said, Heikin Ashi is an average bar. It's pretty much a weighted candlestick. The open, high, low, and close formula is different than the normal regular candlesticks. Consider and have always at the back of your heads that the open price is always in the middle of the previous bar. It is very useful, okay? It is very useful in a trending market because it's easier to spot on a timely manner strong trends, okay? And also, it's similar to the candlesticks. We need to do some price action. What I mean by that, we need to monitor how big the body of the candle is, whether it has a wick or not, whether there is how big the wicks are or how small the wicks are, because this is the way to interpret any signals that the Heikin Ashi candlesticks try to show. Okay, but we're gonna see all this in a bit. Anything you need, let me know, okay? We're gonna see the colors as well in a bit. Just a second. So before by the way, just before we move on, I would like to highlight also that I mentioned earlier, it's another form of technical analysis, okay, to look at an asset's price movement with regards to an overall trend. So by being able to see the overall trend, okay, with this way, using Heikin Ashi, it gives you more clear picture, okay? And it might give you slightly better, let's say, okay, I shouldn't compare it, but let's say, okay, slightly better trigger points than the usual regular candlesticks. Exactly, because it's what we said, is using the average to show the price movement of an asset. That being said, though, Heikin Ashi charts have in mind that can be applied to the same time values as regular candlestick charts. With this way, it's making it useful for scalpers or day or position trading strategists. Okay, so it's an analysis, technical analysis, that a form of a technical analysis that is used mainly by scalpers or position traders. Okay, and you can see this from this comparison: a smoother appearance than regular candlesticks. Let's move on though. So we have seen this as well. Sorry for that. Okay. So let's take it step by step. There are few ways to trade, okay, using the Heikin Ashi. First of all, let's understand what each of what the colors mean, what happens when we have a wick, when we don't have a wick, happens, what it means when we have a doji candle, and so on and so forth. Okay, so let's take it step by step. First, you need to understand that each candlestick will tell you something about the price trend. Okay, and for any one of you that is a price action trader, I'm sure you understand what I mean. So, for example, let's take the very first icon or candlestick that I use over here. This one, okay? It's a green body candle. I use green in this illustration for bullish, okay, right? And the price move higher. So green body Heikin Ashi with no lower wick. So in the bottom, as you can see, there is no wick. It's only on the top. So this is indicative of a strong upwards trend. Okay, big body candles. Okay, green. Okay, you can, I don't know, you might use, I don't know what kind of colors you're using on your charts, but if you use green for bullish and red for bearish, or yellow or white for bullish and red for bearish, that's fine. Okay, in this illustration I have green, but you can see my examples later on. I'm using also white. I prefer white, to be honest, but it doesn't look nice in a presentation. Um, so yeah, a long body bullish Heikin Ashi candle, green in this case, with no lower wick, like this one, implies and represents a strong uptrend. Okay? So for anyone that is already participating in this uptrend, this kind of candles giving signals on whether he should hold its position open or not. Okay? So traders who are already into the market, who are already have bought into a market, might use these Heikin Ashi signals as indications to hold on to their position in an attempt to maximize gains in an uptrend. Okay, so you might don't use Heikin Ashi as such, but if you're not really confident whether the uptrend or downtrend, uptrend in this case, will hold, you can apply Heikin Ashi to double check, to cross check your um, um, to double check with your decision. Now, if you see a Heikin Ashi with a green body and a lower tweak, um, like okay, like this one, this is not a big body candle, but it has also lower wick. Then this is a very first sign that something is like changing. So since we're in an uptrend, this means that momentum, bullish momentum, started decreasing. Okay, so this might be the very first sign that the uptrend might run out of steam. So in this case, participants who are holding long position to the market, they might consider this as a signal to start looking to exit their respective long trades. Okay? Okay, so let's move on. Now, one more thing. A Heikin Ashi with a small body and a large wicks, so like this one and this one, is pretty much is another indication that we are at the end of the trend. Okay, this is an indication that we are at the end of the trend. So this is usually used for exit point. Okay, and you see this? If we had an existing trend, this means that it has reached its end. Let's see the bearish version that does this downtrend. So, okay, if you have using the red for a bearish, so Heikin Ashi with a red body with no upper wick, okay, represents a strong downtrend. You can see from my illustration right here that we have repeatedly red candles with no upper wicks. So this means that we are a strong downtrend, and this downtrend continues and continues and continues. As soon as we see, however, a red body with upper wick, sorry, then very first primary sign that, oh, wait a minute, Andrea, something's changing over here. Sellers are closing positions, something is changing, momentum is changing. So at that point, you need to consider, you need to double check, use other indicators as well, why not? Check whether it's the appropriate time to close your short position. It's a sign that that bearish momentum is increasing and we might soon reach the end of the downtrend. And the same as before, a doji candle, so a Heikin Ashi with no body or a small body like this one, and large wicks, it's another alert that we breach the end of the trend. So an exit point for sellers. Doesn't mean that you need to wait for the doji candle to exit the trade. Okay, you might consider exiting the trade as soon as you see an upper wick. Okay, so let's move on. So, guys, okay, this is just a summary. Okay, large body candle, no lower wick. Long, large body candle, no upper wick. Short, small body candles with upper and lower wicks. Something is changing, the existing trend is changing, it might run out of steam, but you can consider entering the market again, okay? Once you have a confirmation and a change of candle color. What I mean by that, here we had a downtrend, right? Started like that, but that wasn't not enough indication that we have a downtrend until we got this one, okay? Long tail, lower, red color candle, but still a wick on the top. So again, not something that it's an ideal entry point. The entry point came with this candle with no upper wicks, right? So here was a nice entry level. As we moving lower and lower, we were having upper wicks, but it doesn't matter because the body of the candle was quite big. So we can still see that our downtrend is still on. Now over here we have no wick again, so still in an uptrend. The next though, it was bullish, but a small body one with long tails. So this can be ignored, right? Or we could like hold until the next one comes up to present and confirm whether we have a new uptrend or that was just a correction before another attempt to the downside. So it's not always black and white. What I'm trying to say is that over here I wrote wait for confirmation and change of candle color. The change of candle color came but without confirmation, because if you notice, okay, the previous candle didn't have any upper wick, so that means that bears are in control, sellers are in control. So the only thing that we had over here is a change of candle color, but not a confirmation, because it was a doji candle, small body, very very small body candle with large wicks. So we had to wait for the next one. Okay, you could consider closing your short position, but that wasn't sufficient to imply the end of the downtrend. And indeed, the very next one with no upper wicks confirmed that sellers are in control and we haven't breached the end of the downtrend. So the end of the downtrend came with these two, actually these three candles. So doji one, red doji one, white doji one. So there was something, okay, what's going on? Is it sideways? What's going on? That those three is triggering the attention. So we need to wait for confirmation. We had the change of the color, but we need confirmation. So confirmation came with the very next one. So potential entry point will have been the break of these highs, of the previous highs. Okay, could be an exit point and also an entry point for the new uptrend. So try to analyze the body of the candles as with the best possible way. Don't see everything as black and white. Don't see, okay, change of candlestick color. Okay, I'm gonna close my position. I will put a long one. No, you didn't have a confirmation, so it's not always black and white. Okay, so let's move on. We're gonna see a lot of stuff. So now this is a wide, another wide example. So I put this on because I wanted to analyze and give you a more general, another. I put as much as I could in order to make you understand that doji is not always the exit point. Okay. Okay. So as you can notice in this chart, Okay, in this one we have white and red candles. Okay, and you can see that where the white arrow is. Okay, over here, um, the white arrow highlights that we have multiple white candles in a row that had no wick on the bottom. So let me zoom in so you can see. Look at that. 1, 2, 3. Just one that it has a lower candle, and then another bullish one, and another bullish one, and another bullish one with no low wick. Okay, this shows that there was in fact a significant uptrend in effect. Also notice how they were a couple of candlesticks had long wicks on both sides. You see that? Let me just, okay. This one, for example, these ones. We have two doji ones over here with long tails at both sides. With the over here. So this showing that a potential that we could have a potential trend change. It's not a confirmation, it's the very first sign that we might have a potential trend change. Finally, if you notice with this red candle, after having this sign of a potential trend change, then we had a bullish one, okay, but afterwards we start having consecutive red candles. However, it wasn't the time to enter short because we keep having upper wicks, quite big ones, not small ones. Okay, so that wasn't a confirmation that we are indeed having a new trend, and this time to the downside. Confirmation came with this candle over here. And actually, more precise, this one, the very first red candle with no upper wick. Okay, so that was the very first. That could have been a nice entry point for the downside for a short position. You see, we had a change on the attitude, so that's done. We have a change in the color, and finally we have candles without upper wick. Okay, without any upper shadow. That's showing that a downtrend is indeed there, but not only there, it's a very strong one. So the fact that there is no wick on the top, it suggests a very strong downtrend and a change in the attitude. So note that when there are several long wicks in a row on one side of the candle, it can present that there is a significant amount of pressure building in the marketplace. So for example, when you see several red candles with long wicks on the bottom, that shows that bullish pressure is starting to build. So that wasn't, so what I'm trying to say here, for example, we had a change of the color, but we keep having upper wicks and a pretty long lower wicks. This means, yes, that is changing, the sellers are gaining the control, but the fact that we had huge lower wicks over here suggests and upper wicks as well suggests that bulls are still there and fighting. Okay, so they still a significant price buying pressure, sorry. Okay, that's why I mentioned that this one, that it was without a tail, without a wick on the top, and a much smaller lower wick than the previous one, with the close price well below the previous sessions. That was a nice entry point. Okay, let's move on. Also, some further things to keep in mind. with Heikin Ashi system. So because the candles tend to leave behind small corrections and consolidations, this means that when the direction changes on Heikin Ashi graph, it's likely a larger trend change. Okay, are you with me? So the ability to filter out the noise of a trend has a major effect on how you can exit a trade. So for example, I have another chart over here, okay? So this chart shows an uptrend, right? You see, it shows over here an uptrend that eventually formed a couple of long wicks at the top, right? And quickly, after those candles, the next three were in red, okay? While the second and third had no wick whatsoever on the top. So this shows that the color change quickly identified the change in trend as the market dropped from there. The more candles you see without a wick going against the trend, the more likely the trend is to continue. If you see a large majority of bullish candles without a lower wick, this shows just how much bullish momentum there is in the market. So this will allow you to be more confident in the trend and therefore hand into a profitable trade. Okay. So obviously the same applies to a downtrend that features multiple red candles without the wick on the top. So let me check. Actually, before we move on to the next example, let me just, come on. So yeah, so multiple white candles over here without any lower shadow, uptrend is marked, then consecutive red candles with no upper wick, so strong downtrend. These two long upper wicks at the top of the trend was the very first gasp of the uptrend before rolling over. So the lack of range, if you see on the last two candles, as well as lower wicks, showed actually that things were changing. What else? Anyway, we're gonna see more examples. But before I move on to the next one, just to clarify, guys, that you need to consider when you see doji candle, okay, you need to consider that is a candle that seems to carry more weight than any other form. What I mean by that, the doji candle in Heikin Ashi systems is when the market opens and closes at the same price, or at least close to the price. Okay, so this is particularly interesting and telling on a Heikin Ashi chart when it appears at the top or the bottom of the trend. Okay, so, and this is happening because the average, remember the Heikin Ashi is the formula is based on average values, average bars. So this is because the averaging formula will take into account what has been going on, and if the candles start to slow down, this clearly means that the momentum is dropping. But nonetheless, let me show you what I mean rather than just talking. Guys, are you okay so far? I have no questions, nothing. either to repeat something. So are you here? Can you hear me? Oh, good. Okay, all good. Thank you. So let's have a look on the Swiss yen 4-hour chart. Okay, so I have with a blue rectangle, I have highlighted the top of the uptrend. So this blue, in this blue rectangle, you can see that that why I mentioned that it is the top of the uptrend, because we had seen that the market runs out of steam. And how we can see that? With multiple doji candles. There are 1, 2, 3, 4, 5 consecutive doji candles. Okay, so these 5 consecutive doji candles, they were really like shouting that market runs out of steam, so the uptrend is at its end. And can you notice that the next candle with any length to it at all is a red one? You see that? Boom. No wick, down, long wick lower. So this was the confirmation that momentum rolled over. So shortly afterwards, after these 5 consecutive doji candles, we had that one indicating that the market started a downtrend. This is a very quite common with Heikin Ashi indicator, as it takes out so much noise. So it should also be noticed that the very nature of the candles seem to form a lot of flux. So let's, for example, do we have, let me just, no, I don't have it here. We're gonna see some flag examples as well, but later on. So sometimes quite not common is that sometimes in the Heikin Ashi, most of the time in the Heikin Ashi indicator, we might see the candles forming a lot of flags. So I will show you later on. So actually, yeah. So I have few more examples over here, in which you can see candlesticks, normal candlesticks on the euro dollar in a 5-minute chart, and Heikin Ashi again in a 5-minute chart. Okay, using also a line chart. You can ignore line chart if you don't want to, if it confuses you, but you can see that over here at 1.14 we had, actually to be more precise, the close was here, so 1.1399 we had the confirmation that a downtrend already started. So that was a nice entry point for the new downtrend. And if I come to the normal candlesticks, you can see that with the normal candlestick, that wasn't there wasn't a signal, a clear signal for a downtrend over there. So that's why I'm trying to compare the two to show you that most of the time the fact that it's taking out all of this noise and etc. It gives us some quite better entry or exit points than the regular candles. Okay, exactly, because it identifies the strength of market momentum. Okay. You can combine it with moving averages, you can combine it with RSI, you can combine it with average directional index. It's up to you. That's solely up to you. Now, another example, comparison again. This is how the euro dollar in 1 hour chart moved with the regular candles, and this is how it looked like with the Heikin Ashi. Can you see that it was a clear uptrend? Clear uptrend starting from here, 113.63, okay, 113.63, and continue, a bit of a sideways, but no change of the color, so we didn't have to exit the trade. Extended higher with no wick again, doji, but no change of the candle, so the exit point would have been over here, okay, or here at least, which is a small body candle and long wicks at the bottom of the top. So you can see how clear how easily you can read the Heikin Ashi candles in comparison with the regular candlesticks. That's why I mentioned that it's using by scalpers most of the time, because they want something fast, they want something quick, something not easy, we're not saying easy, but straightforward, let's say. Everywhere for everywhere. There's no so I show you an example of 1 hour, I show you example of 5 minutes, it's up to you. What kind of what is your preferable time frame? What you're usually trading? What kind of strategy you're using? I mean, what are you doing usually? Daily position trading, scalping, swing? What are you doing? What's your thing? Yeah, any particular time frame or multiple? What are you doing? Less than an hour, so 30 minutes, 15 minutes, 5 minutes, 4 hour, or depends solely on what triggers your attention. Okay. Okay, just okay, just to confirm something. Okay, 4 is saying higher to lower time frame analysis. That's perfect, but remember that the decision to enter and exit should be on a particular time frame. Okay, so if you let's start, you have started from 4 hour, just to check how the trend it is on the 4 hour, then you want down to the 1 hour, but nothing trigger your attention. I mean, there was the same uptrend, but you went down to the 30 minutes chart to find an entry point. Okay, stick to the 30 minutes chart to enter the market, and then to spot the appropriate exit point. Don't swing all the time. Okay, scalping, it says and 5 minute time frame. That perfect. Why not? Are you using Heikin Ashi candles? Are you finding useful? There is a print, there is no particular time frame. It's up to you. If you're a 5 minute trader, stick on a 5 minute time frame. If you're multi time frame trader like a 4, okay, do your analysis from top to bottom, from higher to lower, and on the time frame that you will trigger your attention and say, okay, here it seems like it's a nice entry point, stick to that. Okay, stick to that and stay to that. What is the can we just this is yes, we could. Anything in mind? Okay, I have cable over here. No, that's DAX, sorry. Oops, that's DAX, which is pretty, which is pretty, oh, it's not straightforward actually. Okay, here I have a 30 minutes chart DAX. So what we are facing right now, doji, wick up, doji, bullish, no wick, so wick on both sides, and we have 2 consecutive no wick candles. So I remember what I said earlier, we need a change of color. Yes, we have it, and also no wicks, and this is what is happening. So this is, so we need to wait for this candle to close. Okay, okay, just to have two consecutive ones. 3 consecutive ones will be even better, but to have 2 consecutive ones, so we need to wait another 9 minutes for this candle to close. But if indeed we have 2 consecutive candles with no wick on the top, we have the change of color as well, so that might indicate a near short-term bearish bias for DAX in the very, very short term. Let's find another example. Do you have anything in mind, guys? Ah, that's that's nice. That's nice. That's cable. That's cable. So that was the entry level. Here it is. Look at this beauty. It was a nice uptrend with consecutive candles with no wick on the bottom. A change of color quickly, but small body one and with a wick on the top, and then 2 consecutive bearish one with no wick on the top, so that should have triggered a sell position. Okay, these are not considered as these are dojis, okay, doji ones, so this is not calling for exit, okay? It's not calling for exit, it's just calling for indecision, for sideways move. And then boom, 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 lower lows. Indeed, some upper wicks, but there is no change of the color. There is not a bullish candle with no wick or wick on the bottom. The only white candles that we got were doji, largely doji, with big long wicks in both sides. So it was just indecision. Okay, so if something like that happens, we need to be a bit patient until we have a clear view. Do you get what I mean? Are you okay? Are you okay with this example? That's a brilliant example for cable, actually. You see, because these 3 consecutive candles, okay, could trigger a sell position. Okay, entering a sell position, the very next few candles were a bit like indecisive, and they might cause some fear, but if you closely monitor how they look like, they closely monitor how small body candles are with long tails at the top, at the bottom, long tails at the top, at the bottom, then 2 bearish one again with long wicks at the top, at the bottom, a very decisive one again. It wasn't triggering for a closing your position or something, because there was no confirmation about the change of the trend. There was just some confusion, some sideways movement, some consolidation. Okay, not even that. This was like calling, okay, is it a descent? But there wasn't a change of color. Okay, that's why I said earlier, it's not all black and white. Wait for confirmation. Not only a change of color, but also a confirmation. Read the length of the candle. Read the wicks. Okay. So yeah, it's still on. It's still on. 3 consecutive bearish candle extending this decline. No wicks on the top, so still in the downtrend. Let me get back to the slides because we have plenty of examples still, and I want to catch up. That's another comparison. 1 minute, 5 minutes, 15 minutes. Okay, 15, 5, 1 minute. So now I have few more examples that are combination of Heikin Ashi and patterns. But before I do that, I would like to just remind you how, before you enter the market, some steps that you need to follow, but in every strategy, not only Heikin Ashi, just a quick reminder that have a look. First of all, scan your markets. check whether it's an existing trend or not, whether it's ranging, whether it's trending. Go to the higher time frame and move lower and lower to see, okay, in the daily chart, okay, my asset overall is in an upwards trend. And then check your intraday time frame. What is going on intraday? Is it going against the trend? Is it going along with the trend? Just to have a general understanding of your asset, because with this way you can spot a pattern presented by the price. You might spot a triangle, you might spot a wedge, you might spot a breaking out scenario. So that's why it's good the beginning of the day to uh, write down or determine the momentum based on the higher time frame first, and then going lower. Map the primary levels of support and resistance that could influence the motion of the price. Remember, always write down a key support and resistance levels that you might find by analyzing your charts. Third, and then, so the third step will be, after you have spotted some key support and resistance levels, after you have checked whether there is any pattern, whether there is it's in an overall uptrend or downtrend, whether there is what kind of momentum there is in the medium term, etc. Then the third step will be to apply your Heikin Ashi in order to look for buying or selling signals in lower time frames where the direction of the trend favors the higher time frame momentum. Also, have a defined level where you can place your stop loss order to control the risk of the trade, okay? It also shows it's not all trade we have to take, especially when the Heikin Ashi is not followed. Exactly, Kennedy. Yes, it's not black and white. Yes. So Kennedy is saying it is also shows it's not all trade we have to take, especially when the Heikin Ashi is not followed. Yes. Yes. Critical thinking. Question yourself before you take a decision. Apply other indicators as well if you want to trigger your if you want to be to be more confident in question. Okay, Heikin Ashi is following, but RSI is not. Okay, what's going on? I'm in an uptrend, but I don't know. I'm trying to find out scenarios to help you. But yes, always um, question yourself in order to be absolutely sure what you're doing. How to place a stop loss order to control the risk. So, okay, there are many ways to place a stop loss. That's, I don't know whether you're following particular strategy, Wahid. Some people are using ATR. Some are using the previous support or resistance level. Some others are using the previous, they put the stop loss below the previous session's low. It has to do solely, or risk and reward ratio. Always consider your risk and reward ratio. So there are plenty of ways to place your stop loss order. Okay, so for example here, come on, let me find where is that. Actually, I'm not going to chase, but I will go just straight to the cable that we were looking at. As I mentioned, for me, these three consecutive bearish candles with two consecutive with no wicks will trigger an entry position here. So I will have either consider ATR, okay, to have a trailing stop loss, okay, and my trailing stop loss will have been somewhere here, so slightly above it. You can tell, but it will be stop out. So that's why you might consider like having multiple ATR. Let me put the ATR just to see out of curiosity. But either way, even if it stopped out, I had the chance to enter again, you see? So don't worry if you're doing wrong. I mean, it's the noise, it's the noise. This candle was on the European Open. So there was a lot of indecision, a lot of uncertainty, a lot of consolidation, volatility over here. So that explains why my entry could be stopped out, but it wasn't late. It was, I could still either add to my existing position or open a new one. Okay? Okay, guys, don't be afraid. Okay? So, okay, I don't know which one of you has his own strategy, but I'm just throwing out some ideas. Like, so over here was at 6 points higher, then it keeps rising and rising and rising. Consider a double than what the double twice the ATR or sometimes 3 times the ATR. So one example would be twice or 3 times your ATR as a trailing stop. Okay. So right now the ATR, so if you're in an existing a long position, ATR right now is standing somewhere at 15. So twice the stop loss should be 30 higher, let's so 15, 50, that should be somewhere here. Should be somewhere here, yes. So yeah, 30 pips higher. So twice the ATR. We change our candles with Heikin Ashi. How do we? Oh, sorry. Absolutely sure. Yes, you're absolutely right. So let's assume that you have these regular candles, right? On the left-hand side, you can find Heikin Ashi. It's at the very bottom. Okay, here it is. You apply it. Okay, it has some instructions, but I will show you what these instructions are. So pretty much it's saying that it will be applied on top of the regular candles, but it's a mess if you leave it like that. So what I do is go to properties, okay? And where it says line graph, I put it in black, okay? And the common, I click line chart. So what I do, I change the candlestick, the regular candlesticks with black color, and I shift it to black line because I don't want to see it. Otherwise, if I see it, it confuses me. But if some of you want to see the line chart, that's fine. Just change the color, I don't know, maybe to yellow. So it would be like that. It's up to you. So basically, I change my regular candles, so these are regular candles, into line chart, and I use a different color just not to have my you know, just to focus on the Heikin Ashi rather than on the line chart. Even though it's nice to combine both, because you can see that over here when we were where we were. Okay, so let's let me go back to the cable example. Where's the cable example? Here it is. And I will turn, I have the line graph with black. I would put it with yellow or green, something like that. Because, why is that? Over here, it was all this indecision that we were facing, right? Indecision over here with 2 doji candles, down, up, down, okay, another indecision. So by watching whether the line chart is pointing down or whether it's pointing up, it could help you having another indication on whether the asset is like changing or not. If it confuses you, just put it with a black color and just hide it at the back. Okay, that's solely up to you. Because you can tell me, but Andrea, over here, I have 1, 2, 3, 4 consecutive bearish candles with no wick, so that's sell. that's calling for sell, but the line chart is pointing up or sideways. So if it confuses you, just, sorry, oops. Ooh, I deleted my Heikin Ashi. Just hide it. Just properties, line graph, put it back in black, and just avoid it. And just put your favorite indicators just to monitor what's going on. So RSI or stochastic, that's up to you. So over here, I can see that stochastic is already overbought, oversold. RSI is at 37 and flat. So that indicates that my downtrend is stalled a bit, but doesn't calling for an end of the trend yet. We don't see any bullish signs over here in stochastic or RSI. So we could consider holding our short positions. There's no change. Okay. I can't find the candle on the MT4 and MT5. It's on the navigator. On the navigator, expand all the indicators, and it will be, where is it? Here. In the MT5, again, is under the very last folder that has canvas panel and a lot of indicators. So at the you need to very carefully go down one by one until you find Heikin Ashi. But yeah, it's by default. I mean, you don't need to download it. MT4 and MT5 offers it. Okay. Oh, you are in the mobile app, Thompson. It should be there, but it will be very tricky to find it. You need to be very careful to scroll slowly the navigator until you find your Heikin Ashi, but it's there. It's definitely there. Definitely there. Wahid, I have a special stop loss webinar. I will send you the link. Once you have free time, please have a look, okay? Yes, I'm sure there is on mobile apps, guys, on the MT4, MT5 on mobile version. Let me double check right now. Let me double check on my MT5 in the mobile version. It might be a bit tricky to find it, but it should be there. Where is it? It's a bit tricky. Okay, MT4. Come on, go on. Come on. So indicators. Heikin Ashi. Do you have the updated version? Yes, it is here. Do you have the updated version, guys? Please double check whether you have the updated version, okay? Otherwise, try the web version, but it should be there. I can see it in mine. Don't know why you cannot, but yeah. Along with many others. It's there. Okay, so let's move on because I have a few more slides. I will just quickly just touch a bit. Okay. So this is a Heikin Ashi chart once again. Consolidation, 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 sideways, doji candles, one without wick, but it was not there indicating that we were in an existing uptrend. Then one, two, three consecutive doji ones, another bullish one at the same resistance as the previous one. So this is calling for putting a trend line on and say, okay, we have a resistance over here. And then we had the red one with wick at the top and wick at the bottom. So that was the very first indication that, no, second indication. The first indication that the uptrend is changing. It was all these repeated doji candles. That was the second indication that a downtrend might start, okay? So here was the blank, 1, 2, and pause, doji. So if you catch that, you are lucky enough. If not, just don't, just, if you had entered, just exit, because the consecutive, the two doji candles over here, and then the bullish one with no wick, that was just saying that no, that was a very limited decline. But what I'm trying to illustrate over here is the fact that sometimes you might see patterns, right? We have spotted two resistance levels, but we notice that the last few sessions, this is Bitcoin, by the way, our price action, Heikin Ashi price action, is in a triangle. So whatever you already know in regards to candlestick patterns applies to Heikin Ashi as well, because we have spotted that is moving in a triangle, and we have a breakout of the triangle over here, suggesting that the uptrend is getting stronger and stronger, because it's a bullish candle, okay, but still we have a lower wick, so we need more clues. We have a breakout of the triangle, so we need to wait for another confirmation before we enter the position, the asset long. Okay, and this is it. This is the same chart. You see, the confirmation came at the very next one. So a nice entry point will have been either the okay, no, the breakout was too early. Actually, the entry point will be the breakout of this resistance area that we posted earlier, that we spotted earlier. So that was, you could have set a pending order at that level. Actually, as soon as you notice this breakout, the fact that it failed to extend higher and it was again on the support, on the resistance level, you could have set a pending order. Okay, bam, this is the point where the trailing stop based on the momentum of the chart is triggered. So that the very first doji candle, red candle after 1, 2, 3, 4, 5, 6, 7 consecutive green candles, that was the very first indication that we need to exit the trade, or you could, if you're using a trailing stop, you could have shifted just below here to lock some gains as well. Okay, to lock some gains, or just exit the trade. And then consider, so you see that these are alternatives. This is a 2-hour chart. That was on the breakout. It's the same, but so that was the breakout of the triangle, but in a 2-hour session time frame. So doji, all this, if you're in an uptrend, okay, let's assume that you have entered here, you were in a 12-hour chart and you have entered here, but you want to monitor whether you might consider adding to your existing position, or just you want to monitor to find as soon as possible an exit point, so you can go down to a lower time frame and monitor it. Okay, so you see we had some consecutive doji candles. What you could do in this case, drag and drop your stop loss and put it higher to lock some profits. Okay, and put it here. Then as it breaks again and extends higher and higher and higher, again, once you see doji candles consolidation, again, like here, like here, like here, you can drag and drop your stop loss from here, just below the lowest wick in this consolidation area. With this way, we are locking profits, guys. Do you get it? Wahid, we have some signal services, auto charts and advanced insights. Please go to webinar, go to www.hfm.com. Under the tab, under the tools and education tab, you will find auto charts and advanced insights. These are signal services for free, but you need to meet some criteria. Okay? Visit the website, go to Tools and Education tab, and you will find over there auto charts and advanced insights. Okay? Auto chart is a signal service, yes. Put link. Okay, guys. Okay, I'm putting the link of a link for the tools page, and if you scroll down, you can see Premium Traders tool, Auto Chartist tool, and you can click on them and you can download them. Okay. And actually, we are at the end of the session, and I'm gonna call it a day if you don't have any further questions. Once again, another example in an uptrend. We had the very first red candle, black in this case, indicating the end of the uptrend. Falling wedge was formed, okay, with two doji candles at the end of the downtrend, signaling the end of the downtrend. Then a breakout of the wedge, indicating that there might be a new trend starting, an uptrend this time. Confirmation came on the second candle, which extended higher, but also broke, extended above the falling wedge with no wick. Can you see that this was the very first one with no lower wick? So that was the entry point here for an uptrend. Then here, small body candle, change of color, doji one, and another red one with upper wick. So that might be an exit point. Okay. Bam, 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 bam. It formed a triangle, breakout, broken also the triangle, but also the resistance, the repeated resistance area. So another long position. So you could use these two, the low of the bottom of the triangle as an initial stop loss. And as soon as you have some consolidation signal, you can drag and drop your stop loss here and lock some profits, and so on and so forth. Okay, so guys, that was it. I'm gonna call it a date. I have some other examples as well. Feel free to watch them when you have some free time. Any question that you have, I'm here to help. You can email me at webinars@hfm.com. Here I illustrate again, I put on the pros and cons of using Heikin Ashi, but anyway, we have covered all this earlier. Try to do your risk management, right, before entering a trade. Don't establish an appropriate size. Risk management, and have as much as an adequate sorry, that's a second. Try to be disciplined. Okay, try to be disciplined, psychologically disciplined, not emotional driven. So yes, so that was the end of the session. Thank you very much for joining. Anything you need, I'm here to help. Okay, so email us at webinars@com. Okay, I'm gonna call it a day. Thank you very much. Have a great day ahead, and see you again tomorrow with a live analysis. Okay, thank you. Bye bye.